Okay, what is going on, MegaWhale team? Welcome back to the channel. Thanks for tuning into another video today. Today's video is going to be a quick update on Bitcoin. We're going to keep it nice and short and sharp and just dive right in. The purpose of today's video is to look at the short term on Bitcoin and talk about this symmetrical triangle formation or pennant formation that we are currently forming on the smaller time frame. Of course, Bitcoin is still looking bearish, and obviously what we can look at here is the inverted chart, and obviously we can tell that this is in fact a bull flag on the inverted, or should you say a descending channel, or an ascending channel on the standardized version. So obviously we already know that is a bearish formation. We do expect a break to the downside. In saying that, we can sometimes see reversals from these patterns. I've been telling you guys for the last few months that although this is a bearish pattern, and we personally do expect a move to the downside, just as we've been telling you this entire time, there is always a small, very small chance that these patterns can break upwards. All right. Obviously, price action is not bound to market structures. Obviously, market structures indicate certain points of support and resistance on a more dynamic scale, diagonal scale, and they reflect human psychology in the essence of people are putting sell and buy orders at specific points because they believe these are basically orders of which points of particular points in price in which people are being looking to buy and looking to sell. That is how we form these support and resistance levels. But in essence, there's always a chance that maybe news or institutional investors or a whole range of other things can drive the price out of these traditionally bearish patterns and to the upside. So today's video, we're taking a look at the short term. We'll mention briefly our long-term targets again, as well as our bearish invalidations for the new people to this channel. Before we get into it, remember like, comment, and subscribe. Click the links in the bio, click the links in the ping message, join our Twitter and our Telegram and our Crypto Academy Telegram channel. Let's get straight into it. So to start with the bearish invalidation, of course, we're just going to go over our targets once more. $48,000 200-day moving average on the daily chart. When we break the 200-day moving average on the daily chart, we are officially bullish again on the macro time frame. All right, in the large time frame, we are bullish, just as we did over here. Get my pen out. Technically, we're bullish. Over here, technically, we're bullish. And if we come all the way back, we can see many times in Bitcoin's history, again, technically we're bullish. So these points on the 1 day, these flips of the 200-day moving average are significant price points on the Bitcoin chart. In saying that, we also have our 100-day moving average. What does a 100-day moving average reflect? Well, it reflects a similar point or a similar message to a 200-day moving average, meaning that when we do get above, or when the price is generally above the 200-day moving average, that's when we generally see upward movement in price. It is obviously more bullish when we're above both the 200 and the 100 moving average. We see this particularly in bull runs. Obviously, this November 20 to April 21 bull run, we were above both. If we go back, so this chart's not going to show up. If we go back to the 17, again, we're above both. So when we're above both the 100 and 200, generally we can confirm that we have a very strong or very aggressive uptrend. When we just break above the 100-day moving average, but not 200-day moving average, as we have seen more frequently on the Bitcoin chart, all right, I'm going to pinpoint a few over here. We have a small rally upwards, and that rally usually takes us to the 200-day moving average, where we either will find resistance and reject, or break through and obviously continue upwards. So, in essence, for us to be bullish on the macro, we need to break the 200-day moving average, all right? And that will be a macro uptrend. For us to be bullish on the shorter term time frame, all right, expecting what I mean, I would say intra market pattern bullishness, which is, are we bullish for a move up to the top of this market pattern? We would need to break the 100-day moving average of 41,200. All right, so as long as we remain below 41,200, we should expect volatility and we should expect more downside action because the data is suggesting that we are still in a downtrend. All right, so just to get that out of the way. Now, moving on to a smaller time frame, let's start on a 4-hour chart. Obviously, we have a crossover happening here, which is bad. I do want to bring attention to this red line. This red line is not relevant on any time frame besides the 1 hour time frame. It is indicating the POC line on the VPVR. All right, so just to reiterate what's going on, we rejected from this area here. We said when we lost 50, I think it was when we said we lost 45,600, we'd see a crash below the 44,400. It would not hold, and we end up coming down to 39,000. We did that and we posted that. I'm going to show you guys what we posted, and we can see exactly how that played out. Obviously over here was a post, and we came down directly to here, and we used this inverted chart. I'm just going to flick through them real quickly to use this prediction. But basically we've been telling you guys ever since around the beginning of April that, you know, this month was going to be a bloody month, a very, very strong downtrending month, but we have seen that. The question is, we are now at the bottom of a range where we've seen a lot of bounces. Are we going to bounce again? Are we going to bounce again, or are we going to just crash below? So today's video again is going to be focusing on the short term. Let's break down our bullish and bearish scenarios. I'm going to go over our short-term bearish scenario, then I'm going to go over our short-term bullish scenario, then I'm going to talk about our macro bearish. So the short-term bearish in perspective or in relation to this chart, the short-term bearish would be in regards to this structure here. If we break below this structure, this will be our short-term bearish scenario, right? Obviously losing the 39,000 would result in a drop to 37. So we're not even going to worry about talking about this whole area here, because we already know if we lose 39,300, we will come down to 36,800. All right, there's no if, buts, and ands. That will happen. All right, there's a very, very, very high chance that that will happen. An incredibly high chance. So the only scenario we're really going to be focusing on when we're talking about the bearish scenario today is the distance between the current market price and the probability of us losing this level. Because if we lose this level, we already said we are aware we'll come down here. All right, so we're going to talk about that. The bullish scenario is obviously the probability of a break upwards from current market price, breaking through the 100-day moving average on the daily, which was $41,240. Right, because remember, if we break above the 41,200, whatever it was, $41,240 range on 100-day on the 100 moving average on the daily, that would signify a small shift in the micro trend or the short-term trend, which can indicate a move back up to the top of a channel, which is obviously bullish for altcoins, obviously bullish for the short term for Bitcoin. All right, so let's look at it. Let's get into it. So obviously right now we are in a symmetrical triangle formation. There's many ways we can draw this symmetrical triangle. Right now we do have this variation of the symmetrical triangle drawn in. We also had a descending trend line, which I think we recently broke out of. I'm going to draw it in again. Perfect. So we had that descending trend line. We got rejected up over here. Pretty significant rejection, guys. That's when the total cryptocurrency market cap got hit. And that was actually, we're talking about this when we did our last video. This was when we did our last video on Bitcoin. So since then, we kind of pushed up. We support resistance flipped, and we're bouncing around this POC line. So the bearish scenario to start with, guys. When will we expect a drop, or how, in fact, will we expect a drop to this lower level, this dotted line, which would inevitably result in a break downwards? Well, we would need to lose this POC line. All right, so this red line on your chart, go to your chart, draw it in, $4,138. If we daily close, or if we hourly close even, all right, below this level, we can expect a breakdown of this triangle. All right, the triangle will not hold support again. It is very unlikely. We've already had our third test. So 3 tests, 2 tests. All right, that is what we have a symmetrical triangle. You show 3 on one side, 2 on the other side. The direction it breaks from here on out will probably, or most likely, be the direction it continues. So if we lose this POC line, the price will be coming down to find support here. The only thing is, it's not going to find support. It's going to crash right through it. We might get a little bit of fluctuation, but inevitably it will come down here. We will not hold this level again. We've talked about this many, many times on the channel. We will not hold this level again. If we come down to this level, we will break through this level. All right, we can expect the price to continue downwards. All right, so let's take a look at the bullish case scenario again. All right, so that's our bearish. Let's take a look at the bullish on the short term, then we'll look at our indicators, and then we'll run over our long-term projections. All right, so I hope so far it's making sense. If you have any questions so far, leave them down in the comments below. I said this was gonna be a short video. It's actually going to turn out to be quite a long video. There's a lot to talk about. So let's take a look at the bullish scenario. So the bullish scenario, guys, remember we're going to draw this line in. We're going to say this line here is our 100-day moving average on, 100-day moving average on the daily chart. All right. So our bullish scenario here is obviously we would find support above this trend line. We bounce where we are now. We are pushing out. We're breaking above, but we're getting rejected on the 100-day moving average. If the price can flip the 100-day moving average, get a close above, there's a chance we can push upwards to this level. We do have to keep in mind the 200-day moving average is converging down. So if we do break above over here, we could definitely get rejected here before we even push up to that 200 and come back down to this level, signifying a break of the trend line, a break of the POC, and a continuation downwards. So the bullish scenario for us here is only really a safe scenario to assume once this level is broken. All right, even if this move upwards happens and start to begin, we have to remain cautious, we have to remain vigilant, and we have to assume that the breakdown will still come until that 100-day moving average on the daily is broken, which will signify a short trend reversal. All right, so when that trend reverses, we're most likely going to see a push to 42,137, which is the next support resistance, and possibly even 44,000 as a last push upwards before we break down again. All right, so keep in mind with that, guys. So let's take a look at our long-term macro bearish scenario. Then we'll come back and look at the technicals of Bitcoin and discuss on the short term and the large term exactly how we think, this is all going to play out. So let's take a look. Let's go to Brave, new coin liquid index, and let's just take a look at the larger time frame here. We're going to go to the 7-day. We'll chuck on our log scale, and we were talking about these trend lines in the previous video. So for now, what I'll do is I'll just get rid of these trend lines for the sake of the video, and we'll just take a look. So we can see a few things happening over here. We can see that we are above both the 200 and the 100-day moving average on the 7-day. Now, obviously, that does signify there is still bullish strength, or still some sort of strength Bitcoin is experiencing. We have seen in the last few times only 2 data points in the 7-day, but when we do lose these levels, we have significant drops. All right, so these are our significant drops to leading to basically the bottom. All right, so let's take a look at the 100-day moving average. It's pushing up and it's converging at around 36,300. That is no coincidence. Remember, back to our chart, we're just looking at where was that lower ascending trend line for our ascending channel. That was sitting at 36,600. All right, so that is acting as now the 100-day moving average support on the 7-day. If we lose that level, which we will lose that level if we lose that $39,000 mark, we can expect a drop down to the 200-day moving average. I've done an analysis on this already in my previous videos. I will quickly go over it one more time to give you my prediction of where the price will be heading. We do have two long-term predictions. The first long-term prediction is our more conservative long-term prediction. Of course, this is all provided Bitcoin breaks 36,600. This is not valid until Bitcoin breaks 36,600. When it breaks that level, it is then valid. Our target is the 14th of July. All right, that was our initial target. All right, it may extend. That was our initial target. It's going to be anytime after the 14th of July. For now, we're going to copy and paste the distance, so rise over run. I don't know if you guys remember mathematics from grade 10 or whatever, whenever you studied it. All right, you take the distance, you take the height, and we're just going to copy and paste that back over, and we're going to apply it to the chart over here. All right, and we can just assume the trajectory of the 200-day moving average is going to remain in this fashion, and it should end up somewhere around 24K. All right, so there is 24,000. That is how we come to our $24,000 prediction. If we lose this level here, we can expect a significant drop to 24,000. Of course, this can happen anytime after the 14th of July on the 14th of July moving forward. So that is our first bearish prediction. The second one, we do have to be taking a look on the smaller time frame. We'll go back to the daily and we'll just quickly roughly draw in this ascending channel. We won't get it perfectly, but our ascending channel on our original chart we were looking at before is kind of the ascending channel we're going off. So this is roughly the ascending channel we have, the ascending channel formation we have over here around something like that. All right, so what we can do, we can take a measured move from the top of the previous high, so the base of the flagpole. Remember, if we invert the chart, this is technically the base of the flagpole. All right, we take it to the apex. All right, the apex is going to be the top point of which the price reaches within the channel. All right, so it's in the market structure. We don't take it to a wick. All right, we take it to the top point of support within the market structure. All right, so that is our apex. we're going to invert it again, all right? What we do then, we copy and paste the direction and the length and apply it to the breakdown, so the top point of resistance within the channel, which will be this point here, and we can extend that down. Where does that lead? Guess what? It leads us to 24,400 on the log scale. All right, so that is confirming our $24,000 target. Again, this version, and we can do it on our standard chart, which gives a little bit more of a aggressive target. If we bring our trend line to the lower level, it gives a little bit more of an aggressive target. I'm pretty sure it brings it down to even 12,000 if we attach it over at the top again. So we can see on the normal scale, it brings it to 12,000. I think it's unlikely we go that low. I'm not trying to scare you guys. I think it's unlikely. I think the 24,000 is a viable target. We've shown you two methods of analysis just then that suggests 24,000 if these levels break down. So moving back to our normal chart, and I'm sorry if anyone's still sticking around to watch the rest of this video, thanks for sticking around. I hope so far you've learned something. It is a longer video, like I said. If I haven't done a Bitcoin video for a few days, these videos usually go on for a while, but so I just want to cover everything we've already talked about, get everyone up to speed, especially if you're new here, get you guys up to speed, and obviously do our analysis to a high degree of accuracy and precision. So going back to the 1 hour chart, let's bring up some of our technicals, and we can see we're pushing back into the symmetrical triangle yet. Briefly, before we get into the technicals, I want to just talk about how should you act in this scenario, because if we take a look at the last let's just take a look at the daily chart. If we look at the last month, guys, this month has been probably the worst month for trading since May 2021. All right, it's been an absolute shocker of a month. There's been pretty much no opportunity, and where there has been opportunity, it's been very, very high risk. All right, taking entries on altcoins anytime anywhere between this point here and this point here, this whole direction here, which was basically the whole of this month, was incredibly high risk. During this period, if we take a look from our breakdown, all right, we take a look from our breakdown, which was here, to our support here, we had 2 days of green candles. All right, 2 days. The rest were significantly larger red candles. Look at the size of these candles, absolutely engulfing these green candles. All right, it's been a very brutal month. If you're watching and if you're stuck and you're confused why you haven't been making a lot of money this month, or why you're getting wrecked, or why all your trades are seeming to get wrecked, even though your trade setups are good and your data supporting your methods are good, Bitcoin is really, hammering the market here, guys. Bitcoin is really dragging everything down. All right. When it reverses, everything will change. Be patient. You don't have to be trading every single day. You don't have to be trading every single month, even when stuff like this happens. Just focus on preservation when the market is down. You're not worrying about growing your portfolio when the market is down. You can do that when the market's up. When the market is heading down, focus on preservation and take short-term scalps that have great risk-reward ratios. That is it, all right? That's all you need to do. So moving to the technicals. Obviously, we've talked about the moving averages. Let's talk about our Gaussian channel. So we talked about the Gaussian channel the other day on the daily. We're going to go down to a smaller time frame today and talk about all of this stuff on a small time frame. If you want to listen to our technical indicator analysis on the larger time frame, go watch our previous video. Today's a short-term analysis. Let's get into it. So the price is underneath the Gaussian channel here. And like I said before, we're not really bullish yet in regards to this until we break that 100-day moving average. But if we look at the Gaussian channel, similar if we invert it, we see when we break through the Gaussian channel, we generally end up on the other side of this channel. So we can see a few times on this channel. I'm trying to find a very simple example. Here's a really simple example. The price was above the Gaussian channel, so technically it was below it. All right, we're inverted. When we break into the channel, we end up eventually going below it. All right, it doesn't tell us how far below it we're going to go. It just tells us we're eventually going to push through it. This was a sign of weakness. All right, we push up, we have strength that propels us through, and then we continue the trend after finding support. All right, so we can see a similar thing happening or potentially happening here. Of course, we do need a break in this Gaussian channel to have some glimmer of bullishness according to the 4-hourly Gaussian channel for us to push through it. So this line is going to be lining up with about 47,000. It's going to be lining up around 47,000. If we can break into this Gaussian channel, there's a good chance we might be able to actually push through the Gaussian channel, which will result in that push to 44,000. Of course, if that happens, the 100-day moving average is broken. which this resistance line is broken, which is also going to suggest that push upwards to 44k. So Gaussian channel is looking very much neutral right now. It will look bullish once we break into it. Until then, it can definitely still push sideways and converge downwards or even continue downwards. All right, so Gaussian channel done. Bull market support band, let's take a look. So above the bull market support band here on the 4 hourly, this is really nice to see, but we're not quite closing above it. We have that candle open above, but we're still in that Gaussian channel right now. It's really interesting to see what's happened. We would like to see this close above the bull market support band, particularly because we are outside the triangle here. So the difference is this time we were still within this market structure. We still had major resistance here. So even though we pushed above the bull market support band, we still have a lot of resistance above us. This time slightly different. We are above this major resistance level. So if we can break above, which we have, remain above and close above the bull market support band, it can indicate that move upwards to hit that 200-day moving average, hopefully push upwards, hit the daily 100-day moving average, break the Gaussian channel while it does it, and then send us upwards. All right, so keeping your eye on that as well. We do want to wait for this 4-hourly close over here. Let's take a look at the last two indicators, RSI and MACD. And you know, guys, this has been a very long video today, so if you're still watching, you know, big shout out to you. I really do appreciate all the support you guys give me, particularly in times like this when the market is down. Of course, being a trader, you're not always going to be winning. Sometimes you get lost. Sometimes you get losses. Sometimes you make massive profits. Sometimes you make big losses. So this month has been a brutal month for everyone. Thankfully, we have been level-headed. Thankfully, we haven't just aped in the market, and we've been waiting. We've been cautious, and we haven't been letting our emotions take control. And thankfully, we avoided most of his drop, well, basically all of his drop. So it's been a great month in the sense of portfolio. What's the word for it? Portfolio preservation. There it is. Getting a bit tripped up there. As for growth, obviously not a lot of growth opportunity, particularly because we're not short in the market yet. So let's take a look. All right, let's go to a daily, of course, and start with this. Obviously, we have some convergence on the MACD. We talked about how we have a consistent amount of decrease in selling pressure in comparison to buying pressure, which is causing this volume to slightly trend to the upside. This is buying volume. We're slowly starting to see buying volume take over. The reason why it's red is because we still have a significant amount more selling volume, just less selling volume in comparison to buying volume in accordance to the previous period. So generally what happens is when you have this, it can signify we're finding support. All right, it can signify bulls are gaining strength over bears, and it can also indicate a possible reversal is incoming, provided that it remains like this and we have this volume increase, this buying volume continuously increasing. RSI is not telling us much right now. I would like to take a quick look at the RSI in a little bit more detail. As you guys know, I don't really do much analysis besides the videos we see here. I do a lot of my analysis live with you guys on these videos. So a lot of the stuff we're looking at now is just coming to me as I look at it, and we can see this level here. This is coming to me at 34.34 on the RSI, and wow, this is a really, really important level, guys. Holy hell, this is a really important level. We can see many, many levels of support on this. I'm just going to go through it. So we find a support here, obviously find a support here, nice bottom. Looking back, bottomed out over here. Even our July bottom, 34.34, huge. Pushing down, $10,000 bottom, 33.34. Obviously bear market crash, and the crash happened when we lost the 33.34. Here we go. Here's some interesting data, guys. So 34.34, the last time we lost that level, we saw a significant crash. Could this be the level that prevents us from dropping down to 24,000? Could this be the level that enables that drop? Let's go further back. Let's take a look at this a little bit more. Gets a little sketchy here because we are in bear market territory. Obviously, again, guys, lost to 34.34. Huge crash. Let's take a look one more time. Here it is, guys. Lost to 33.34. Huge crash. All right, massive crash, guys. This is very significant. This is probably the most important piece of data we have just found on the chart for a few days. This is very significant. What does this tell us? It tells us we are either, I know this is going to sound dumb. We're either bottomed out here or we're going to crash massively. And we've been saying this all the last few weeks. We have either bottomed out here and we bounce upwards to 44k, or we do exactly what we've been saying, which is to crash massively, which means losing this trend line, hitting 24,000, bang. That's it, guys. That's the video. I hope you guys enjoyed the video. And if you stuck around to the end, well, guess what? 34.34. Chuck it in your charts. Bet you're glad you stuck around to hear that, guys. And we'll catch you in the next video.